switched off. There he is. Welcome back, Bob. I want to start off by acknowledging the great call you made in silver on the upside. I don't think I was not bullish, and you were pointing out all the drawdowns that you were seeing, and thought maybe this was going to be the time that there was going to be such a massive short squeeze because there was enough silver to deliver. So where are we now, Bob, when it
Yeah,
comes to that?
yeah, right now, you're still seeing, actually, I think it was about a week and a half ago, the Shanghai Futures Exchange saw their lowest positioning of gold and silver for the year. So there was selling from those guys that moved the market downward, from that 25 area, I guess you could
Yeah,
say.
where was the selling? It was coming from Asia
Um,
up here?
you had Asia, and then you also had the CTAs were,
Oh,
they
those
were,
guys.
yeah, they
Yeah.
were moving positioning, going short, or you have I'm just trying to pull up some of this stuff right
Do you have
now.
any visuals you want to show and take the screen or
Um,
not?
yeah, no, it's too early in the morning for that one.
Okay.
um,
Okay.
I got to do this not after a like 3 or 4 day weekend type thing, but no, we
No,
we were at a,
you just have to make more meetings.
yeah,
You know what I
yeah,
mean?
yeah,
AA and things like that.
yep,
Anyway.
yep,
All
definitely.
right. Anyway. Anyway, so I'm in TA. You ever gone to a TA meeting?
No.
Traders Anonymous? At first I wanted to trade and now I can't stop myself. Huh? My
I
name's
use
Dale. I'm addicted to trading.
I
Hello,
spent
Dale. Go ahead.
right,
Yeah.
right. I spent half my life in front of a screen. No, I
Yeah.
used to do that. I used to do a lot of block trading, day trading when I was at Morgan Stanley, and those type of things. It just was, yeah, back in the 90s. But yeah, that was a different era back then.
You
But
have a view. No, go ahead, Bob. I'm sorry.
yeah, the positioning right now, you saw a lot of liquidation, and not only that, you saw sort of this debt ceiling run up, which kind of almost sort of, I don't say shocked the markets, but just quieted them down. Everyone was sort of waiting to see what was going to happen. There
Do you
wasn't.
think Congress is going to pass it?
Oh, I'm sure they will. Yeah, it's.
Okay.
I mean, it's it. I mean, they play the game every you know, literally every time they do this, they just play this game. From what I've understood, I guess it's basically an unlimited debt ceiling for the next year and a half or whatever that number is. But it's interesting though, because the Trump 2017 tax cuts, the sunset provisions start in 2025. So everybody's personal income tax brackets roll back upward. So if I don't
Wow.
know if, yeah, nobody's really watching that kind of stuff. You have student
Yeah.
loans, I guess that would, that's in the, I guess with the
Yeah.
Supreme Court.
They have to start paying again.
Yeah, which is going to be a big draw from discretionary income. There's a lot of stuff that's, I think, going to hammer or that could really, I guess, buffer the stock market. I'm not sure. The metals is a totally different story because that's going to be more of a focus on tax receipts, deficit spending, growing of the debts. I think it's not going to be typically okay if the stock market goes down, the metals go down with it. I think it's going to start looking at the balance of payments and all that internal stuff that no one really likes to look at.
Okay.
That'll be more of the focus. But I'm just trying to pull up here. Yeah, I mean,
You also made a good call on the gold silver ratio when I thought that it was turning the other way. Do you have a feel on this? Here's a daily of the gold silver ratio.
Yeah, if you go to the monthly, I don't know if you can pull up a monthly chart,
I can.
because what I try to do is kind of look at the big picture and narrow back in, but that's a massive head and shoulders that you're looking at. That last
What?
rally that
This is the head and this is
yeah,
a right shoulder.
Yeah, and then that
And
you
this
could,
is the left shoulder?
yeah, or you could go to, was it 2019, that sort of, well, I guess
This?
yeah, I mean, there's a series of sort of head and shoulders that may be building a longer term time
All
frame
right.
that's,
Well, I got to stop you, Bob. You caught me on. I don't know. I don't know what kind of movie. But anyway, if this is a Head and Shoulders top, it's Quasimodo.
nothing
All right.
nothing in the metals business is very simple. I wish
All
it was,
right.
but
Anyway, if that's a Head and Shoulder, that's Quasimodo ringing the church bell. So anyway, we're all, we all have the freedom to call charts whatever we want to call them. But so you're still looking lower for the gold silver ratio to where 50. I remember when it was at 40 for a long time in my career
yeah,
in the
I think,
prehistoric age.
yeah, back when, yeah, I think we're headed that direction maybe in the next couple of years. I think when silver, my guess is you're going to see a recession at some point. That's going to create more discontent. It's going to create, potentially more monetary or more fiscal stimulus. The question is, will the Fed accommodate and buy all the paper like they did before, or some type of form of yield curve control? Those are things that there's no way I can see this thing being sustainable if Congress doesn't get a cap on spending, which politically I don't think they can do anyway. Uh, but the positioning in the markets, it's kind of interesting because you're seeing, you saw a lot of long liquidation on the CTA side, the futures markets last week, or come out as of last Tuesday.
And silver or gold?
Silver and gold. You
Okay,
had,
both.
yeah,
Okay.
yeah. I think it was on gold. You had, I think on the future side, there was like 19,000 contracts liquidated on the long side, on the speculator side, and about 19,800 shorts were covered by commercials as of last Tuesday. So those are pretty big numbers. And then at the same time, you have Shanghai. You're seeing a lot of inventory coming off that market or being pulled from the market. So you're seeing demand for physical starting to pick back up. And at the same time, on top of that, the last 3 weeks, the contango on silver, because we rolled to the July futures, went from about a 30-cent premium to the London spot market. It's down to around 11 cents premium on the exchange for physical spread, meaning that the selling that was coming in was really more focused on the paper side than it was on the physical side. So you had that very similar to what you had last summer, where you have this sell off, but if you look at the internals of the sell off, it's more leveraged structured products being liquidated than, for example, the physical market throwing in the towel saying, okay, I'm done. It's never going to go up again. Those are supportive factors longer term. That's what I try to look at, because dealing with the physical metal, you could get so shook out from day to day on the price action. But I think what a lot of us are looking for is really the long-term picture. Again, not to
Right.
sound like a broken record, but we're all looking out the next 5-6 years, not the next 5 or 6 weeks.
Yeah, but still, even in physical, good entries help, right? I
Yes.
mean,
Yeah.
if you got long up here and now silver's $3 cheaper, depending upon the volume of your purchase, that made a big difference. And didn't it?
Yes, the entry does help, but the problem you run into sometimes in the physical world is you get a pullback, and someone that was interested in buying metals sees the pullback, and then all of a sudden, okay, it'll go down a little bit more, and I'll just get in when it goes down to 20. They look at this stuff and they don't really focus on long-term picture. So then the question is, if silver goes to $50, does it matter if you pick it up at 26 or at 23? I mean,
Yeah,
if it drops to 23 or 20, let's just say it has another bloodbath down to $20, who knows? But what happens if the premiums start picking back up again on the products? You start getting tightness in the market, and all of a sudden, products have gone up about $1 or $1.50 an ounce. I mean, the physical game is a little bit different than just buying futures contracts or the ETFs. You're kind of weighing the supply and demand at the same time you're weighing the price, and that's been a challenge for people that have been waiting for lows, because the industry will come in when you get that move down in price and sort of this pickup in buying and on the dip sort of scenario, and you see this pickup in demand. All of a sudden the industry is very quick to potentially raise rates or raise premiums on almost everything. And we saw it back in March during the bank crisis. Literally all the big online dealers jammed premiums up on 1 ounce silver products, sovereign coins, that type of thing.
Yeah.
$3 an ounce, and it was totally uncalled for. You had a big rush of people coming in and buying, but it wasn't like it caught the market completely off guard. But that's what happens in the industry, and that's unfortunate, because the consumer is the one that ends up not being able to sort of get a good deal or get a good entry point.
Okay, well, it's near the end of the month, so I thought I'd put up the monthly chart on silver. Would you buy a candle like that? Or Bob, let me call it the way. Is it always the right time to buy?
Well, in terms of physical long term, you're looking at accumulation. So it's a dollar cost averaging type of scenario
Okay.
that I look at. I mean, the problem we have is it could be an event driven scenario. Like if you look at 2008 and you look at the big crash that happened after Bear Stearns. That looked horrible on the charts, and all of a sudden you had positioning get caught blindsided and was too short, and the market scurried up in 2011. The market, it's hard to call this on a day-to-day scenario when you have leveraged futures that are not only that, the open interest on the Comex has been declining since 2020. So you're not seeing the dominance that the futures markets have had. Yes, they can push the prices up or down short term, but when those prices go too low, Asia starts waking up and starts buying the physical. That there's a change that's been happening since 2020, and you saw it last year when silver broke 21 to the downside. India just came alive and just was buying everything that wasn't nailed down, and you're still seeing inventory levels. I mean, you're at 29 million ounces, 29,800,000 ounces on the registered category in the Comex. That is just scraping along the ground. And you're seeing the London market, the LBMA inventories on silver. That's sitting at 2016 levels. That's when they started charting inventory levels. That's right at the lows. That at least that's chartable. But that's the kind of stuff. I mean, if you start seeing inventory levels start going straight to the moon and people stop buying, yes, we're looking at trouble. No question about it. But you're not seeing that. It's almost like the market's just gone quiet. Yeah, I mean, there's the old adage, never short a dull market. Maybe we. Yeah, I would say that that could be true here, but the metals seem like they're never dull. There's always an event out there that it could latch onto that, could move it either way. But it seems to. I guess the question for you is this debt ceiling limit sort of agreement, if that does go in, let's just say it's voted on and passed, is that a sell on the news event for you?
Selling what?
In the general market, and the general market,
just
the
risks.
stock. Yeah, in the general stock market. Just
I'd say that they're pricing it in. I actually think we're going to miss the deadline because the easy work was done. I don't think they're going to be able to muster up the votes on both sides. I think both extremes on both sides are unhappy with this.
I guess that's what you call a settlement.
Yeah, so I don't, we'll see. I think the easy part was McCarthy and Biden coming to an agreement that, was mainly just two people, and maybe they're close, their allies and their, people, their staffs. So now it gets a little more difficult. We'll see. And if it goes through, I'd say a lot of it is priced in. I know a lot of patient bears that are waiting for 4,300 plus to get short S&Ps. So we'll see if the market accommodates them if they get it through Congress.
Yeah, and I've been saying since January.
I find this interesting. I was just looking at it, Bob. I said that last week, but with the run we've had in S&Ps, um, if we hold here, this will be the second higher low in VIX. So VIX isn't confirming the move in the S&Ps yet.
mhm.
Just something, that most people wouldn't notice. Thought I'd put it out there.
Well, it
Yeah,
kind of goes also to the idea of when if the debt ceiling limit's lifted and you get that wave of treasury supply coming into the
yeah,
market. It's something I've been talking about for since January. It is typically it's when that debt ceiling gets lifted, that's when the markets
right,
really tank. And I think that's
right,
what you have, this classic squeeze the shorts. I mean, whether it's AI, the AI rally, or the you know sort of the old 70s Nifty 50, the
yeah,
certain number of stocks are carrying this market. I think it's what the top six are carrying the market, whereas the rest of the market's up 1% or something like that. It's some nominal number. So it's a very narrow. Is that what you're seeing too on your
well, yeah. Everyone's talking about it's 8 stocks holding up the whole market.
mhm.
So why don't we get to physical? And I mean, it's your specialty. What do you recommend people buy? The little bars or coins?
It really depends on the individuals. If they already own a lot of product, there's no need to own more coins, so to speak. Yeah, just get the best price product you can. That's what I kind of look at it first is, whether it's coins or bars, just get the lowest premium product. We now have premiums up on our webpage, goldsilvervault.com. We actually just revamped the entire website too, so it looks a little bit more modern. But it's one of those where, depending on the client's perspective, whether they want something that's tradable or barterable, to have for
Oh
barter,
yeah,
the 1 ounce coins. But otherwise, yeah, and if you get a good deal, there's nothing wrong with coins. The premiums tend to be maybe a little bit better when you sell back. The problem is not overpaying for the product, and that's what this last March, April timeframe, I was literally 50% of the premiums that most dealers out there were charging for almost any product. It was unbelievable how much the consumer was being overcharged, and that's something I'm trying to attack and get just educate more on with people that are interested in this market. It doesn't. The industry needs to reform itself and bring in, if they're going to bring in more of the Main Street audience, they can't gouge them. And paying $20 over spot for Silver Eagles when the mint sells it for $2.95 over spot to the authorized distributors. There's a huge disconnect there. I mean, you're playing the premium game of hoping the premium rises, not necessarily the spot, and that's not investing. That's gambling. So it's buying finding the right products out there. Going to another sovereign coin versus versus buying a U.S. mint product, that type of thing, or you just go to bars, 100 ounce bars, or
yeah,
even 1,000 ounce bars if you're a big client. The interesting thing is I was at the Scale Global Scale Global conference last week in Las Vegas. We actually had a booth there, and it was more your macroeconomic type of political conference. They brought in a lot of big names. Boris Johnson was speaking, Hillary Clinton, a couple of different secretaries of state or secretaries of treasury were speaking, and along with Howard Marks, and a lot of breadth, I guess you could say, in terms of different subject matter. But the audience it was a lot of people there, but they were primarily a lot of high net worth family offices, institutional investors, that type of thing. And the ones we spoke to had a lot of interest in the metals, but they all had a commonality of traditionally playing the ETFs or other structured products. And so one of the reasons I went down there was to try and help educate the larger audience into the physical world and away from sort of these structured vehicles, because it's, in a way, these structured products just act as a sponge, soaking up money that would have otherwise gone to physical metal. And I think that would, I think that would have more of an impact on trying to maybe stabilize the market versus, when you're playing leveraged products, you're going to have a lot more volatility because people are whipping in and out. But that's the type of longer term focus, and you're seeing that sort of that switch over the last 3 or 4 years into physical metal because of the removal of counterparty risk, systemic risk, a multitude of other things. But as you get more volatile in this market, or you see the inflation, that's, the question is, the Fed, do they try to kill inflation or kill the economy? It's going to create more distortions, I guess, kind of like what you kind of see on a daily basis when looking for divergences and things like that.
Yeah. Do you have a view on platinum coins or any kind of platinum products?
Yeah, platinum. We've been buying platinum. We've been seeing a lot of people buy platinum. It's a longer term story, though. It's not a platinum is going to be more on the supply side dynamics with energy crunches coming out of South Africa and mining activity that's been greatly diminished from over the last few years, and it's more of a supply deficit story than it is demand driven. I mean, you have if obviously if the economy stalls, you're going to have less car production, you're going to have less catalytic converters being needed,
Or
that
the
type of
play
thing.
on the economy?
Yeah. I think at some point, platinum is not known as a monetary metal, but oddly, sometimes platinum actually leads gold and silver.
Oh,
There are
I've
times,
seen it at a $1,000 premium, not a
yes,
$800, $900 discount.
yes, totally. And yeah, so and you've seen car manufacturers move away from palladium into platinum because of that huge discrepancy as well with
Right.
regard to the platinum palladium ratio. And it's similar to the gold silver ratio. This is very, very high. I mean, it's been sticking up here in the 80s for quite some time. To me, I think you're right. If silver tends to outperform at some point, that ratio is going to overdo it to the downside, which means silver outperforms. And so, you could easily go back to the 30s on the gold silver ratio, and that's the way to be completely disclosure, I guess, in the fund that I manage, I'm 70% weighted to silver, 30% weighted to gold. So I think, from a long-term perspective, I think silver offers more opportunity than gold does. It's one of those, it's when it moves like a hockey stick, and you just gotta kind of be patient until that time comes.
Yeah. So it's usually kind of the outperformance comes near the end of the move.
Yeah.
Is when the biggest moves are. And when silver will probably kick in, maybe gold, gold has to lead the way, right?
Yeah, possibly. I mean, silver kind of led the market out. I mean, obviously, silver underperformed when we sold off hard going into, and the gold silver ratio jumped up. But when that gold silver ratio started pulling back, silver was leading the charge. But to me, I look at more of the positioning out there because that's sort of the dry kindling that could put in place a short squeeze. And at that point, anyone who has physical metal that's short against that on the Comex that may not want to lose that metal, whether it's fabricators, whatever it may be, they may be apt to cover and roll. And that's typically when you start to see silver start to outperform in price. The physical market tends to start to dry out when the price starts to go vertical. I mean, it's one of the first things you start to see momentum being lost, unless it's an event like the banking crisis, and you had a lot of buying that was going all the way up. But at some point, the move gets accentuated by whether it's the roll on the futures contracts or just a simply short squeeze that starts to occur. But that's some of the stuff that I look at.
Okay. All right, Bob, best place for people that heard you today to contact you?
Yep. You could go to our website, goldsilvervault.com, or you could just give us a call, 208-468-3600.
Okay, Bob. I wish you continued success as the story, the precious metal story continues its, this should be its time next couple of years. So wish you well and all your clients. And just one thing, Bob does have a place for storage. If you're worried about burying it in your backyard, you want to tell them quickly about that?
Yeah, we have a $700 million all risk policy. We store about 650 million in assets. So we're kind of a unique facility and service. We're one of the largest private depositories in the country. So but I don't do a lot of advertising.
Okay.
I probably should, but the clients like it where things are seen and not heard, so to speak. But yeah, it's everything's off grid, not part of the financial system. It's everything's fully segregated, fully insured by Lloyd's of London. So yeah, we do try to provide a very safe environment, not only for the client, but also their privacy of their information as well. We don't really do the cloud or anything like that. So it's a very old school sort of way of trying to protect the client, from different types of elements of risk.
Thank God dinosaurs still hold policies like that. And also about the advertising, I just watched Kelly's Heroes yesterday. So you don't want to advertise all the gold you're holding.
Right.
If you watch that movie, right? World War II, and they went through German lines to get it. So anyway, Bob, thanks for being with us again today and giving us your take.
Well, my pleasure, and happy belated birthday.
Oh, okay. Thank you, Bob. All right. So go check Bob out if you're in the market for metals. The guy keeps an eye on what his competitors are doing, and he'll give you a better deal. So go ahead and shop, get your best bid and offers, call Bob. I bet he beats it. So thanks again, buddy.
Sure, my pleasure.
All right. You could join the team in 14 minutes on the Morning Edge. Let's have a great week, everyone. Trade well. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.